Howdy, everybody. Welcome to Liberty Call. I am Raymond Dahlman, your humble host, and it is, what day is this? Wednesday, October 23rd, 2024. Hope you're having a fantastical day out there in the interwebs. It's a beautiful day here in Colorado. It's not hot, it's not cold, it's just perfect. It'll get chilly tonight when the sun goes down, but it is beautiful. And my day freed up. All my clients that I had meetings with either rescheduled for next week or later, or didn't RSVP. So I smoked some ribs and worked out. So what have you done with your morning and early afternoon? So anyways, hope you're having a great day out there. And before we jump into, the markets are ugly. They've been ugly all day, but they looks like they accelerate a little bit at the end of the trading session. So anyways, before we get started, if you, I see you right there in the red shirt. Hit the subscribe button and the like button and share this with a friend. Could you please? Thank you. All right. Thank you. And hit the notification bell. All righty, let's get into the numbers. Dow Jones down 0.96%, 409 points, closed at 42,514. S&P 500 down 0.92%, 53 points, closed at 57.97. NASDAQ down 1.59%, 295 points, closed at 18,277. The VIX up 5.71% today. It's at 1924. Canada down 0.58, Brazil down 0.64, and Mexico down 0.4. Let's go over to Europe. Germany down 0.2%, the UK down 0.58%, France down 0.5%, the Netherlands down 0.82%, Spain was up 0.27%, Italy down 0.1%, Switzerland down 0.05%, and Portugal down 0.52%. Russian exchanges both red today. The MOEX down 0.73%, RTSI down 0.78%. And the Asian markets, slightly better. The Nikkei was down 0.85%. Australia up 0.13%. New Zealand down 0.19%. The Shanghai in China was up 0.52%. The Shenzhen component up 0.16%. China A50 up 0.39%. DJ Shanghai up 0.5%. Hang Seng up 1.27%. And the Taiwan weighted when it closed on the 22nd was down 0.03%. All right. Weird day. I've kind of skimmed the articles. I didn't see anything that really gave anyone any real heartburn today. So I'm totally not sure. I don't know if there's some jobs numbers or what. So we'll find out as we go through the news. But, nothing really jumped out at me. And like I said, I skimmed a lot of this stuff. So, all right, let's get into the market recap. U.S. stocks fall as Treasury yields continue to climb and Tesla earnings are eyed. U.S. stocks fell on Wednesday as Treasury yields continue to rise, driven by concerns that the Federal Reserve's interest rate cut cycle might be shallower than previously anticipated. The market reaction followed a mix of corporate earnings reports. So people are in a bad mood because the Fed may not lower rates more than, right now they've telegraphed, they've already done 0.5%. And my good buddy Brian Westbury over at First Trust in his articles seems to think that they're going to do two more 0.5% cuts. So for a total of 1% down from its peak, where it had been held at for a year. So I keep looking over at the Fed calendar. That's why I'm keep looking over at that. So anyways, I just don't understand why that would make the market drop like this. It's just nuts. All right. AT&T saw its stock rise by over 3% after reporting a $4.4 billion goodwill impairment charge on its wireline unit, which was offset by strong wireless subscriber growth, spurred by its unlimited plans. Coca-Cola, however, saw a 2% drop in its stock despite beating earnings expectations as demand showed signs of weakening. Well, maybe people aren't drinking that sugary crap. So I do drink diet soda in the evening. I got a, what's that thing called? It's where you make the fizzy drinks yourself, a Soda Stream. And I get the cheap diet root beer. It's got no caffeine, no anything. It's just like sort of sarsaparilla flavored and a little artificial sweetener. So anyways, where were we? Texas Instruments rose 4% after reporting stronger than expected earnings, helped by electric vehicle demand in China. Starbucks saw its stock dip by 1% after posting declines in key metrics such as same-store sales, net revenue, and profits due to weaker U.S. demand. So, all right, so Coca-Cola is having a little bit of trouble. Starbucks having a little bit of trouble. Well, Starbucks has retail. So, they have, Coke sells their stuff in other places. Starbucks actually has brick and mortar where they actually sell their stuff out of, in addition to, you can buy Starbucks at the grocery store and stuff like that. So it's a little odd that the beverage business is struggling while AT&T is okay and Texas Instruments both up. So Tesla, the world's most valuable automaker, I don't know about that, is set to, well, maybe its stock price, is set to report its third quarter earnings. However, investor expectations have been tampered by after Tesla's Q3 deliveries missed estimates and its much anticipated robotaxi reveal failed to impress. McDonald's faced a sharp 7% decline in its stock price following an E. coli outbreak linked to its burgers, which caused hospitalizations and a death across multiple states. However, analysts predict the financial impact will be limited compared to previous food safety crises like Chipotle's in 2016. Yeah, I saw that in the news here locally. I think someone did they die here in Denver or in the the Denver area? I think the person who passed away was in Colorado. I could be wrong, but I know that some of the cases were here in Colorado. So I don't eat at McDonald's. I wouldn't recommend anyone eating that crap. But I mean, it is consistent. I mean, one McDonald's to the next is fairly similar. I mean, their fries still sort of taste good. I prefer cooked in tallow, but is what it is. And I was always a fan of the fish sandwich. It's small. And it used to be cheap, so not anymore. All right, finishing out here. As investors continued to analyze corporate earnings, Treasury yields rose further, fueled by Federal Reserve officials' signals that deep rate cuts are unlikely in the near term. Economic data releases were limited, with the focus on existing home sales for September and remarks from FOMC members Michelle Bowman. Markets also turned their attention toward the upcoming U.S. presidential election, which is 2 weeks from yesterday, with polls showing a close race. So, like I said, it seems like tech's still doing pretty good. It's, food and drink, food and beverage, those things are starting to slide, probably just because, people, if you only got $5 to go around, what are you going to spend it on? Things you really need or things that you kind of like. So, people are probably cutting back on their sugary sodas. Maybe they're buying the Big K brand if you shop at Kroger, or Czech Cola if you go to Winn-Dixie, or I'm trying to think of the one, it's Publix, I forget. Anyways, people are, pinching pennies, and it's starting, I know I've been telling everyone, watch the consumer spending chart when it starts to, it's going to go this way on your screen. When it starts to tip and flatten out, that's probably the sign that the first domino is going to fall. Then I think we'll probably start to see it in the jobs numbers after the fact. All right. I'm sorry I rambled a lot during that one. All righty. Next up, our friends from First Trust, September existing home sales. This was put together by economist Bryce Gill. So let's see what happened last month. Where'd we go? All right. In September, U.S. existing home sales fell to their lowest levels since the aftermath of the 2008 financial crisis, continuing a downward trend despite the Federal Reserve's rate cuts last month. Mortgage rates have risen back above 7%, limiting any expected boost to housing affordability and leaving many potential buyers hesitant to enter the housing market. Meanwhile, home prices continue to rise, with the median price up 3% from a year ago. The housing market remains sluggish, but higher end properties are showing resilience. Sales of homes priced at $1 million or more have increased by 8.3% over the past year. While existing home sales have declined by 3.5%, this suggests that wealthier buyers and sellers are adjusting to higher mortgage rates, while many homeowners who purchased or refinanced at lower rates before 2022 are reluctant to sell due to the mortgage lock-in effect. This phenomenon limits the supply of homes on the market and constrains sales activity. Yes, I was, me and my wife were actually trying to, we considered selling our house last year, got some offers, nothing that we were willing to jump at, because we were considering moving closer to the children down in the Florida or in the southeast area near the Jacksonville area. Kind of glad we didn't. They've gotten 2 major hurricanes through there this year, and kind of glad we stayed. I mean, granted, we got forest fires and stuff out here, but I'll deal with a blizzard and a forest fire rather than, neck deep water. So that's hard to get. Well, it does flood here occasionally. I mean, I'm on the hillside. I mean, the range is like right behind me. So, if you're in a valley, you could get drowned pretty easily. So anyways, Jumping back in, inventory levels, however, have increased by 23% over the past year, pushing the month supply of homes up to 4.3%, the highest since May of 2020. Still, this figure remains below the National Association of Realtors benchmark of 5, indicating a tight housing market where prices are not declining significantly despite slow sales. In other economic news, the Richmond Fed Index rose to negative 14 in October, signaling ongoing weakness in the manufacturing sector. Additionally, the Federal Reserve reported a 0.4% increase in money supply for September, with a cautious outlook needed to prevent future inflation. So yeah, people are, staying where they're at just simply because, like in our case, we were looking at going to Florida, but, say we took our equity here and then moved to another place. Now we have a mortgage that is, instead of at, I think we're at like around 3, now it'd be like at 6. So it's going to affect our costs. Plus, home insurance down there has gotten out of control since all the most recent storms. Don't say global warming; it has nothing to do with that. Hurricanes come through Florida on a regular basis, but you kind of get locked in. And granted, if we got rid of like the 50 million illegal aliens in the country, that probably would free up a lot of housing and bring prices down. I don't know, maybe. Alrighty, last up, we got an article here from the Mises Institute. It's good to be skeptical of elections. You can tell there wasn't a lot of exciting news today to talk about. So this was written by Connor O'Keefe, and just some food for thought going into the next 2 weeks. With U.S. elections just weeks away, polls indicate a tight race between Kamala Harris and Donald Trump. I'm not sure how. Again, I'm not a Republican. I'm not a Democrat. I'm a hardcore anarchist libertarian. I hate the government. I want as little government as possible. Just enough to round up bad guys and hang them from trees. That's about all I want. Kamala's just not a bright person. Let's just be honest. The woman is, not that Donald is great either, but he's grown on me over the last, 8 years. So I couldn't stand him when before he ran for president, but I find him kind of entertaining now. Anyways, all right, raising concerns about a potential contested election. Oh no. Many Americans are worried about post-election unrest. Looking at you, Democrats, with 68% expressing concern that dissatisfied voters may resort to violence. Not like the violence of 2020 where people were burning down cities in that summer. Some surveys show a notable portion of Republicans, 19%, and Democrats, 12%, suggesting their candidate should declare the results invalid if they lose. Political media has amplified these fears. Mainstream outlets more like DNC operatives, have focused on issues like voter suppression and the potential for Trump to challenge the results through alternate electors, which could prevent Harris from securing enough electoral votes. Although the scenario seems unlikely given the current safeguards, it remains a topic of concern. Conversely, Trump-friendly media, who are they? Even Fox is leftist in my view. Concerns about election security, including stories about alleged fraud, which further fuels doubts on both sides. The mistrust reflects a broader collapse in the public faith in institutions such as the judicial system, public health authorities, and the media, exacerbated by controversial events like COVID-19 and the ongoing political tensions. While skepticism about institutions can be healthy, the erosion of trust in elections is troubling. The political and business elites' influence on the system, coupled with the media's selective approach to election legitimacy, only questioning it when foreign powers like Russia or Iran are blamed, has led to increased public cynicism. The real issue, according to some, isn't widespread fraud, but potential for targeted manipulation in key areas which could flip election results. Ultimately, Americans are urged to critically question the election system, but also to approach these concerns with reason, avoiding assumptions of large-scale conspiracies without evidence. Well, I think there's a surefire way to fix the problem. Vote in person, you vote on paper, and you have to show your ID to vote. That's how I would fix the system. It would, it's going to create a little extra mess, and you're going to probably have more polling places and people to count the ballots and stuff like that. But I'd rather have it done on one day with one person, you have to come up, show your ID. I don't know why that's not fair. Anyone who has a problem with that, I don't want to share a country with you, unfortunately. So, for the left and the right, why not just let's get a divorce? I'll go live with my conservative family simply because they're less crazy. And, the people on the left can go do whatever they want to do. Who's stopping you from living the life you want to live? everyone can move to California, the West Coast. We'll build a wall along the east side of those borders, so you can't come sneaking in, to our land and getting to the Mojave Desert is pretty tough. So, hey, and we got the Rockies and the Sierras that'll create a natural divide. Hey, we can live our lives peacefully. So, anyways, that's just my solution. All right. Well, I hope that's everything that I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. Doodle-doo-doo-doo. Go get all your financial planning needs addressed. So feel free to give me a buzz. I'd be happy to help. All right. Well, that's everything that I had for today. If anyone, like I said, needs anything from me, go to the website. Otherwise, have a great evening, and I'll talk to you again next time. Sorry, I went a little long and I rambled a bit. All right. Bye-bye.